What if you woke up tomorrow and the entire financial system was frozen? Your banking app is blank. The local ATM is offline, displaying nothing but an error message. Shops are suddenly cash only, and your debit card is just a useless piece of plastic. You try to pay your rent online, but the transfer won't go through. At first, it feels like a temporary glitch, but then you look outside. You see the long lines forming at the doors of shuttered banks. You see the panic buying at supermarkets, customers paying with fistfuls of crumpled bills. The news is calling it an emergency financial review. That is when the chilling realization hits you. Your money, those numbers you trusted on a screen, has vanished. This isn't the plot of a dystopian movie. It is history, and it hasn't just happened in distant, unstable nations. It's happened in modern, secure countries where citizens believed their savings were safe. When this switch flips, the rules of wealth and survival change instantly. Take Argentina in 2001. After years of economic trouble, the government saw a massive bank run as people tried to pull their money out. Their solution? They slammed the doors shut. They called it the corralito. Withdrawals were severely limited. Worse, U.S. dollar accounts held by citizens were forcibly converted into devalued pesos. In just a few weeks, people's life savings were cut in half. The middle class was plunged into chaos. Or consider Cyprus in 2013. As part of an EU bailout, the government froze bank deposits. Savers woke up to discover that a large portion of their money in accounts over 100 was being seized, a bail-in to rescue the failing banks. It wasn't just the wealthy who were hit. It was businesses that suddenly couldn't make payroll and families who couldn't access their own funds. In Lebanon, starting in 2019, a total fiscal collapse led to strict capital controls. Banks limited withdrawals to just a few $100s a month, no matter how much you had in your account. The public's desperation grew so intense that some people resorted to robbing banks just to get their own money. Even the United States isn't immune. In 1933, at the height of the Great Depression, President Roosevelt declared a national bank holiday. He shut every single bank in the country for days to stop a total, systemic collapse. The wealthiest nation on Earth had to freeze its entire financial system. The pattern in every one of these cases is the same. Banks do not store your money in a vault with your name on it. They operate on a system called fractional reserve banking. For every dollar you deposit, they keep only a small fraction and loan the rest out. This system creates credit and fuels economic growth, but it is a house of cards built on one thing: confidence. Too many people demand their cash at the same time. The bank simply doesn't have it. The illusion shatters. Governments understand this fragility. In a crisis, their first instinct is to save the system, not the individual saver. They will impose withdrawal limits, freeze accounts, and even seize deposits to prevent a cascade of bank failures. Banks and governments are deeply interconnected. They need each other to survive. The one left vulnerable is you, the depositor. But what about deposit insurance, like the FDIC in America? These insurance funds are a tiny fraction of the total deposits they claim to protect. They are a psychological tool designed to maintain calm, not a fund that can withstand a true systemic crisis. And in our modern digital cashless world, we are more dependent than ever. If the servers go down, if the app fails, or if an institution freezes your account, your wealth becomes nothing but inaccessible data. When the banks shut, the entire economy seizes up. Businesses can't pay workers, so layoffs spread. Supermarkets can't pay suppliers, so shelves go empty. In Greece, during its 2015 crisis, people were limited to withdrawing just 60 per day. This isn't just a financial problem. It quickly becomes a social crisis, leading to hoarding, bartering, and civil unrest. Stability is an illusion that can vanish overnight. The lesson from history is stark. Your money is only yours as long as the system allows you to access it. A number on your bank app is not ownership, it is a promise. So what is the solution? The answer is not panic. The answer is resilience. Diversification is the key to survival. It means not keeping all your assets in one form or in one institution. Holding tangible assets, having cash reserves, or exploring other stores of value isn't old-fashioned. It's a lifeline. We must understand that the financial system is built to protect itself first. Do not confuse the access to your money with true ownership of it. The real question is, what will you do when the system falters? Because history shows us that it can and it will.